Hey guys, welcome back to another tutorial video. In this video I will be covering the MV.Quant, which stands for momentum and volume. It is the oscillator in the suite. This is the last of the 5 that I'm going to be covering today. And yeah, let's dive in. So this one is replacing what would be a, let's see, here it is, the quantizer version 1.0. It's been a long time since I've updated this thing, and I want to kind of quickly mention that this is not yet the final version. I still have a bunch of ideas that I want to try and implement. But yeah, given that I'm updating all the other ones, I definitely want to push out at least one update to kind of give you guys an idea of what I'm aiming for. So yeah, everything that I'm about to show you is still somewhat subject to change. But yeah, I'll cover that in a bit. Right, so we add it to the chart. We get the oscillator. This is kind of like the basic form in which it would normally load. We have our color settings as per usual, the theme and the opacity, and yeah, I'll cover this option in a little bit. Let's actually start with volume because that's probably the easier one for me to explain. Quickly mention the RSI. It has a built-in RSI, but it's not particularly designed to use it actively visually on the chart. The whole idea is to create an oscillator that is different and unique based on momentum more than RSI. But the RSI is there in the working in the background because I do use it for confluence, divergence, and stuff like that. So yeah, it is there if you want to check it out. I mainly have it there for myself so I can double check when I'm developing stuff that it's actually detecting the divergences properly and all that stuff. But yeah, I don't really use this myself, and there are many other indicators out there that use RSI in all kinds of fancy ways. So yeah, this is not really the goal of the indicator. It's more about momentum and volume. So let's start with volume and kind of like how I implemented it in this version. So when you load the volume, you'll see that it has two types of bars, and one would be the normal, the standard volume. This is just a regular volume, nothing special about it. But then it has the shadowy one that's in the background, that's cumulative volume delta. So all it's doing here is that it's taking a certain period, which you have here. So the period, right? It's set to 6 by default, and it's summing up the bullish volume out of the 6 last candles and the bearish out of the 6 last, and then sums it up and takes the bullish volume minus the bearish volume and then creates the delta between the two, basically. And it shows it as a shadow behind the regular volume candles. And let's dive into like something like the 1 hour so it's a bit easier to see. All right, so now you can see that it's very visually, hopefully, at least that's how I feel about it, it's very visually easy to understand as to who is in control of the market. Right, so as you can see, we have a big volume spike, bullish volume spike that creates a big volume shadow on the bullish side, and then after that, volume kind of just chills out and kind of equalizes, and things are more or less in balance. And you can see up here in the chart that yeah, the volume is kind of going sideways, and then you get a big bearish volume spike on this particular candle here, right, which then leads to a big shadow of bearish volume as price moves down, which is also higher than this particular shadow here, right? It makes it very quick and easy to visually identify who is in control. We can see that after this big bearish volume, there's not really any sort of bullish volume coming in of real significance, even though there is a high volume, a bullish volume candle here that's like higher than all the rest. This volume shadow pales in comparison to the previous bearish one, so it's kind of like an easy indication that this particular volume is not really that significant, even though this individual candle looks very bullish. in terms of volume. And yeah, you can see immediately afterwards the bullish volume drops off, equalizes again, meaning that the bears have already kind of nullified all this volume here, and then they take over, and yeah, you create another big bearish volume shadow, right? So that's kind of like the basic idea, nothing too fancy, but it's just a quick and easy visual identifier of who is in control of the market, and hopefully help you kind of identify as to which direction you should be aiming for with your trades, essentially. That's basically all it is. You have both values here, so this is the volume delta. I need to remove that one, by the way. I'll do it in a future update. But yeah, like I said, I'm still working on creating some sort of signal out of this that automatically identifies which volume shadow is higher than the other, or something along those lines. Maybe some kind of like tracker in the middle or on the side, or yeah, I'm not particularly sure as to how exactly I'm going to do it. So that will be coming in the future, in a future update. And then this special option here, which is in the option of style, the only thing it does is that it allows you to create negative bearish volume. So all it does is that it flips the volume that's bearish towards the underside of the indicator. So you create a little bit of a different visual aspect if that's something that you prefer. Maybe you like it more in this style. The only thing that I like it visually very much. The only thing I don't like about it that much is that it becomes a little bit more difficult in some occasions to kind of identify if this shadow is bigger than this shadow because they're on opposite sides. Because otherwise you can just kind of create a horizontal line and see which one is higher. But yeah, like I said, if in the future I have some sort of indicator that tells you what each volume patch has in terms of quantity or something, then that issue is going to be resolved, right? So I think this is a cool visual way of displaying volume with a little bit more information than what you would usually get out of the normal volume indicator. And I'm looking forward to kind of fleshing this out and maybe do some other cool stuff with it. But yeah, like I said, it's a work in progress. So the way I like to do this is, instead of flipping between modes with just one of them, I just add it to the chart a second time. And I have two of them, right? So I just stack them on top of each other. If you have the arguments in your settings here, right? So in status line at the bottom, indicators, arguments, if you have this on, the indicator will just show you in which mode you are, right? So if I switch this to, let's say, RSI, you'll see that it switches to RSI, right? And it kind of indicates there which mode you're in. So let's talk about the momentum one. This is kind of like my personal one that I made. Let me actually give this a little bit of a different color, or maybe a slightly, what color can I give this? Let's just give it a little bit of a red, maybe pink. Yeah, that works. And then make this a little bit darker so we can more easily distinguish them. And yeah, so I'm gonna try and keep this as brief as I can, because there's quite a lot of nuance to this particular oscillator, and I'm still working on trying to make this as user-friendly as possible, obviously, because I've been working on it for so long. I kind of have an idea as to like what signals to look for, but to somebody who's like new to this, it's probably like a little bit confusing. So I'll try to do my best to explain it as quick as I can in like 10 minutes, but not gonna go too deep into it. Plus the fact that, like I said, I'm still working on some changes, and some of these signals that this generates might still change in the future. But this is just so you guys can get your hands on it and play around with it, and maybe give me some feedback on what you like and what you don't like. So there's two oscillators. One is kind of like the background one that is in the same color as the bands, and that's a momentum indicator, but it's non-directional, meaning that if the indicator is going up, that this does not necessarily mean that price action is also moving up, right? You can see here that price action in this, don't have them here, but yeah, so you can see that, let me just highlight it like this, right? So you have this part of price action here, which is a downtrend, which on this indicator is actually an uptrend. And the reason for that is, like I said, this is non-directional. So you have high momentum and low momentum. And you can have high momentum to the downside, and you can have high momentum to the upside. You can have low momentum to the upside and low momentum to the downside, and also low momentum sideways, right? Because if price is not really doing anything, then you can also have low momentum when it's going sideways. And if we activate the signals, you can see that these are highlighted by a little S symbol, which stands for shift in momentum. You can have them as a high shift in momentum or a low shift in momentum. So the high shifts in momentum tend to be correlated with reversals, and the low shifts in momentum tend to be more around consolidation and breakouts. So think about if you have something like a sorry, I'm blowing into the mic and probably destroying your eardrums. Let me just give this a little bit thicker. There we go. Right, so if you let's say have some symmetrical triangle kind of thing going on, right? As price consolidates, momentum tends to kind of die out until it breaks out in either one direction or the other, right? So these low momentum shifts, they tend to come in around this point in the market, basically, which is not necessarily telling you a direction if it's going to go this way or this way. All that it's telling you is that momentum is going to pick up relatively shortly, and the market is going to choose a direction in any moment now. That's kind of the idea behind the signal. Again, like any other oscillator, it's not 100% accurate, but I try my best to make it as interesting and useful as possible. But yeah, you can kind of see where these signals come in, right? So you have a momentum shift here. All my lines are very lightly colored today. There we go. Right, and we have another one here. And another one here, right? So you can see that this one lines up with the bottom, this one lines up with the local top, this one lines up with the local bottom, right? So these S signals are not necessarily bullish when they're above or bearish when they're below. They're more just an indication of there's a likelihood of the market changing its behavior, whatever it was doing prior to that point, right? So we can see an increase in momentum, right? Momentum is increasing up until this point, while market is essentially breaking down and downtrending up until that point, right? So we have a high momentum move to the downside, which shifts at this point in time. And then you can see that it's not immediately a reversal, but it is kind of a stopping point in the market where it starts to consolidate, right? So it is a shift in behavior, a shift in momentum. So that's how you should try and interpret these signals. Let's see if we can find another. Yeah, see, so we have another sideways consolidation, and we get a couple of those low momentum, right? Because the indicator, you can see it's dipping into the lower band and creating those signals there. You can see in the bands, it has little block thingies, and that's basically just as soon as the indicator enters the band, it starts counting those blocks, or not counting, but just tracking the blocks. It's just telling you that the indicator is inside the band, and yeah, when it reverses, that's when the signal will come in. So you can kind of use it in a way to time the market, I guess. That's kind of the idea behind it. Is maybe you get a bunch of divergences, like here. That's what the D stands for. But yeah, momentum is still moving up, right? So you're kind of waiting for that momentum shift to enter the potential, or like take action on that potential divergence, right? So that's kind of the idea behind it. Let's see if we can find maybe a better one on the 4 hour or something. Yeah, so in this case, I will cover the M and the D in a sec, but the M is basically a divergence on the black indicator, the black oscillator here, right? So even though it's telling you that there's divergence here at this point that's kind of starting, you don't get the momentum shift until here, until this candle here, right? So yeah, it can, in conjunction together, you can kind of figure out when to take action on the divergence itself. Because those of you familiar with the RSI, you know that, or any other oscillator that you track divergences with, is like you can have multiple divergences come in one after the other. And in this case, you can see it's different. We have a momentum shift at the beginning, which basically marks the point from which the divergences start to come in, right? So these S signals, they can mean very different things, but they're usually, like I said, you should interpret them as change of behavior. The market was trending up, we get a shift in momentum. From that point onwards, it starts making a bearish divergence, right? So it's telling you that the bulls have kind of lost their momentum, and now the bears are trying to take over, which doesn't necessarily mean that the bears are going to win. It just means that the market is going to behave differently from that point onwards. Right, so like I mentioned, the M means that the momentum, the black one is momentum plus strength, so it's a combination of this one plus another strength metric. So this one is actually directional, so when the market is going up, this will also move up, and when the market is moving down, then this will also move down, the black one. And the M stands for M and divergence on this oscillator. And if we go to the RSI for a sec, you can see that it does the same, but with the RSI, right? So the R stands for RSI, and that means that there's divergence on the RSI. And if we go back to the momentum oscillator, then you can see the D, which stands for dual divergence. So it means that there is divergence on the momentum and on the RSI simultaneously. Basically, that's what it means. But yeah, so individually they can be quite spammy. I have not really applied any sort of filters to them in terms of trying to pinpoint the ones that are good and the ones that are like not so good. That's kind of something that I want to work on in the future. So I'm looking forward to kind of diving into that and really perfecting that. I've made some attempts in the previous versions. Maybe some of you have, you know, worked with my other older versions of the indicators, and I've attempted to do this a couple of times, but I'm still kind of not sold on the final product, basically. So yeah, I'm still working on it. But you can see that the dual divergences are a little bit less common and tend to kind of time the market a little bit better than just the singular ones, but you can see them all at the same time and play around with them. Yeah, one thing to note is that you can see here that the momentum divergences look kind of wonky in a way. And you're like, hey, there's not really divergence here between these points, for example. And the reason for that is that this black indicator, black oscillator, is a visual representation, but it's not the same as the one that the M divergence use. The M divergence use a period of 1, and the reason for that is to avoid the delay that the period creates, basically. So both oscillator signals, they work on a period of 1, so just no delay, just like the RSI essentially. So there's no delay whatsoever in terms of the signal itself. And you can see that now the divergences actually are proper, right? So you can see here there's divergence between this point and divergence between this point, and so on. You can run the oscillator in momentum mode with the period of 1 if that's what you want to do. That's totally fine. For me personally, because it's a little bit spiky and it's a bit faster than the RSI and it kind of moves up and down quite fast, I personally, for me, just interpreting it visually, I like to smooth it out a little bit, and that's why I tend to use it on like 3 or 6 or something like that, just to apply a slight moving average to it, smooth it out a little bit, and it just gives you, I think in my opinion, a slightly more intuitive visual than having it so spiky and so erratic. it just kind of gives you very clean looking divergences like this, right? You have a beautiful, just very visually clear divergence while this is happening here, right? The only downside to it is that the higher the number you give it to smooth it out, the more delayed the signal is gonna get, and it's gonna slowly shift the point at which it peaks towards the right. But yeah, then the thing to keep in mind is that the signal itself is not affected by that. The signal itself is always working, operating on a period of 1. So even though you smooth the oscillator out to make it look a little bit nicer, that has no results on the signals themselves, basically. Right, and for example, this is a very good example right here, right? So as this downtrend is happening, right, we can see how momentum is still, it's increasing, it shifts here, which would be this candle, right? And now we know that the market is shifting behavior after this point. And the thing, what we can see is we get one more sweep of the low, which then immediately gets reclaimed, which also puts in a dual divergence across both the RSI and the momentum oscillator here. This is kind of like your perfect setup, if you will, because you get that momentum shift prior to the divergence coming in with the reclaim and everything. So you have a ton of confluence here. You can also see bearish volume declining and flipping slightly bullish. So that's a very good setup. Ones that I would be definitely interested in potentially taking a trade here, right? If that also happens to be an important point of interest line of maybe a liquidity sweep or a range low or something along those lines, then yeah, that's like one of the juicy entries, and you can see that it creates quite a reaction afterwards, right? So yeah, that's kind of like a perfect example of how I would personally use it. Now, obviously, they don't always come in this elegantly, but yeah, that's kind of like the idea as to what you're looking for. For example, here, if we look in this area, like we were looking before, we get a bit of a bullish volume breakout, and it tells you there's a momentum shift here, and then from that point onwards we see divergence coming in, right? And then it doesn't really create an immediate reaction. Instead, it just consolidates sideways for a little bit. That's when we get another shift in momentum here, kind of yeah, setting up the final liquidity sweep with the big SFP, where the big bearish volume comes in, that actually finally creates the move to the downside, right? So it can take a little time. It doesn't necessarily mean that if you get a shift in momentum or a divergence, it's going to immediately reverse, right? So there's quite a ton of nuance to it, and you need to have a bit of experience with it to kind of understand what you're looking for. I hope all that makes sense. And then, yeah, a signal look back is just how far back do you want these signals to appear. The standard I put it at 5,000, but yeah, if you say something like 500, then yeah, at some point they stop, right? So after this here, they stop appearing. Just so the indicator loads a little bit faster. Yeah, and then alerts. So if you enable the alerts, it will give you alerts for the dual divergence and for the shift in momentum, either the low momentum or high shift momentum. So you will get alerts for both these types of signals, the shifts, the S, and the divergence, dual divergence on the high side and on the low side. So the D's and the S. And that's it. Yeah, the way you create it is just standard. Once you have alerts on, enable alerts, then you go here and you create your any alert function call, just like any standard other indicator, basically. That's all. Create, and boom, there you go. You have to do this on each time frame, obviously, the time frame that you want the alerts to work on. Yeah, that's pretty much it. That covers it for the momentum and volume oscillator. And to emphasize once again, this is kind of an initial stage or early version 2.0 of the previous version that I had. And I'm looking forward to, in the future, fleshing this out with more interesting stuff and maybe potentially kind of clean up the signals a little bit so they are a bit more consistent and interesting than just having them all displayed at the same time everywhere without any sort of nuanced filter to it. So yeah, that's it. I'm gonna sign off here and then see you in the next video, whenever that is. I just finished covering all the new updates, so I think I will take a little breaky for the time being, and then in the future I will be back with more stuff. Alright guys, take care.